When you think about blockchain progress, there are moments that feel like incremental improvements, slightly faster speeds, minor fee adjustments, modest ecosystem tweaks. And then there are moments when the foundation of the network itself levels up. For Stellar, Protocol 23, nicknamed the Whisk upgrade, is one of those defining moments. At exactly 10 a.m. on launch day, Stellar's mainnet flipped the switch, introducing a set of technical enhancements that could very well change the way developers, enterprises, and financial institutions interact with the ecosystem. And while upgrades happen all the time in the crypto world, this one deserves special attention because of what it represents. A clear commitment to speed, scalability, and developer usability, three of the most crucial pillars for any blockchain aiming to power global payments and finance. Let's unpack what this actually means in practice. Stellar's place in the blockchain landscape. To understand why Protocol 23 is such a big deal, it's worth revisiting Stellar's role in the broader blockchain ecosystem. Since its inception in 2014 by Jed McCaleb, one of the original Ripple founders, Stellar has always positioned itself as a network designed for fast, low-cost cross-border payments. Where Bitcoin focused on decentralized money and Ethereum on programmable contracts, Stellar carved out a niche as the rails for money movement, especially in regions underserved by traditional banking. Over the years, Stellar has attracted partners ranging from MoneyGram, for global remittances, to Franklin Templeton, for tokenized assets, all while maintaining a laser focus on making financial infrastructure more accessible. But as competition heats up, with Solana, Avalanche, and even newer Layer 2 Ethereum solutions offering blazing fast speeds, Stellar can't afford to remain static. That's why Protocol 23 matters. It's not just another patch. It's a strategic leap forward to keep Stellar competitive, relevant, and enterprise-ready. What exactly is Protocol 23? Whisk? The Whisk upgrade isn't just a marketing buzzword. It represents a core change in how Stellar handles transactions and events on-chain. Before Whisk, developers often had to juggle two different channels of data when building on Stellar. Classic Stellar operations, the original mode, heavily tied to the native token, XLM, and standard payment/asset issuance functions. Soroban's smart contract data, introduced later as Stellar's smart contract layer, enabling more complex financial and programmable use cases. The issue? Developers had to manage these channels separately, often leading to inefficiencies, redundant coding, and integration headaches. Imagine trying to run two different engines in a car, each responsible for powering separate wheels. You'd move forward, but never as smoothly as you should. Enter unified events, the first major pillar of Protocol 23. By streamlining these data flows into one cohesive pipeline, Stellar is essentially saying, no more juggling two engines. Here's one engine, tuned up, optimized, and built for the road ahead. The second pillar, parallel transaction processing, takes things even further. Historically, Stellar processed transactions sequentially. Step 1, then 2, then 3, then 4, only finalizing after the full queue was complete. While this was fine at smaller scales, it became a bottleneck as adoption grew. Protocol 23 changes this by allowing validators to process multiple transactions at once, significantly improving throughput and reducing latency. In plain terms, Stellar can now walk and chew gum at the same time and do it at scale. Why Whisk? The name might sound playful, but it actually makes sense when you think about it. A whisk in cooking is all about bringing ingredients together smoothly and efficiently. That's exactly what this upgrade does for Stellar. It takes disparate transaction types and processes, blends them into one, and ensures everything flows more seamlessly. It's also a nod to Stellar's branding approach. Unlike some blockchains that lean on hyper-technical or futuristic names for upgrades, Stellar has always balanced the human side of finance with the technical rigor of blockchain. Calling this upgrade Whisk makes it approachable, not just for devs, but for the enterprises and institutions who may be considering Stellar for their next financial product. The bigger picture: why this upgrade matters now. Timing is everything in crypto. The Whisk upgrade arrives just as enterprise adoption of blockchain technology is hitting an inflection point. Big players like PayPal, MasterCard, and JP Morgan are no longer just exploring blockchain. They're actively deploying solutions, building stablecoins, and tokenizing assets. At the same time, regulators are warming, albeit cautiously, to blockchain integration. The fact that the U.S. Department of Commerce recently chose Stellar as one of the networks for publishing economic data on-chain speaks volumes about the trust Stellar has earned. Against this backdrop, Stellar needs to prove two things. It can scale to meet enterprise and institutional demand. It can simplify developer workflows, lowering the barrier to building real-world applications. Protocol 23 addresses both points head-on. With unified events, developers save time and reduce complexity. With parallel transaction processing, enterprises get the speed and throughput they demand for high-volume operations. Market reaction: XLM price movement. On the day of the upgrade, XLM saw a modest 2% price bump. While that might not sound like fireworks, it's important to remember that the market often takes time to digest technical upgrades. In many cases, the true price impact comes not on upgrade day, but in the months that follow as developers leverage the new capabilities to build applications, launch products, and onboard new users. This is why seasoned investors don't just look at price charts. They pay attention to fundamental upgrades like Whisk. Because price follows utility, and Protocol 23 has utility written all over it. Why this matters? Let's use a real-world analogy. Imagine you're running a logistics company. Before unified events, you had two separate delivery trucks. One that only handled small packages and one that only handled larger crates. Every time an order came in, you had to decide which truck to use, schedule it separately, and then track two different sets of paperwork. Now imagine those two trucks being replaced by one super truck that can carry both small packages and large crates at once. Suddenly, your operations are smoother, faster, and easier to manage. That's what unified events is doing for Stellar developers. It reduces friction, saves time, and makes Stellar much more developer-friendly. And in blockchain, developer experience is king. Because if you make it easier to build, more people will build. Parallel transaction processing. Speed meets scale. Now, let's move to the other half of the upgrade: parallel transaction processing. This one's a big deal because it addresses the single biggest question in blockchain scalability. How many transactions per second can your network handle? Historically, Stellar, like most blockchains, processed transactions sequentially. That means the validator nodes had to process one transaction, complete it, and only then move on to the next. It's like standing in line at a grocery store with only one cashier. No matter how fast they are, everyone still has to wait their turn. Enter parallel processing. With Protocol 23, Stellar validators can now process multiple transactions at the same time. Instead of waiting for one to finish before starting the next, they can overlap the steps. It's like replacing that single cashier with a row of cashiers all scanning items at once. Suddenly, the line moves much faster, and the store can serve way more customers per hour. Comparisons with other networks. This kind of parallelization isn't entirely new. Other blockchains have attempted it. Polkadot, for example, rolled out its agile runtime environment, which massively boosted transaction throughput, reportedly up to 100,000 transactions per second on testnet. Bitcoin's Lightning Network approaches the same problem differently, by batching transactions into channels that only settle on-chain once the channel closes. But here's the kicker. Stellar's parallel transaction processing doesn't require batching or complex workarounds. It's happening directly on the mainnet, integrated into the core consensus process. That makes it simpler, more secure, and more predictable. Meridian 2025. The event everyone's watching. Alright, enough comparisons. Let's pivot to the big one on the calendar. Meridian 2025. If you're not familiar, Meridian is Stellar's annual conference where the Stellar Development Foundation, SDF, rolls out major announcements, partners take the stage, and the community gets a roadmap peek. Historically, it's been a catalyst event for XLM. And this year's event, set for September 17th to 18th, 2025, already has the rumor mill buzzing. Why Meridian 2025 could be a game changer. Timing: it's happening right after the Whisk upgrade, which means the Stellar team will be showcasing not just theory, but live, functioning upgrades. Institutional spotlight: we're talking about MoneyGram, Franklin Templeton, Circle, MasterCard, and potentially even Paxos. These aren't fringe names, they're mainstream finance titans. If even one of them rolls out new Stellar-powered products, it's headline material. Government involvement with the U.S. Department of Commerce already publishing GDP and CPI data on Stellar. All eyes are on whether more government or quasi-government entities jump on board. Imagine if Meridian 2025 included an announcement from the World Bank or a central bank pilot. Predictions for what might drop at Meridian 2025. Now, let's have a little fun and do some forward-looking predictions based on the signals we're already seeing. Paxos stablecoin integration. There have been whispers of Paxos bringing its regulated stablecoin onto Stellar. If that's confirmed at Meridian, it would be huge. Why? Because Paxos is one of the most tightly regulated stablecoin issuers in the world. Having their token on Stellar instantly boosts credibility and liquidity. A new wallet product, Meridian Pay? Another rumor making the rounds is that Stellar could launch a flagship wallet product. Something that combines payments, stablecoins, and possibly even identity verification. If they roll this out at Meridian, it would give Stellar its own consumer-facing brand instead of just being the network under the hood. That's a massive step for adoption. Expansion of tokenized assets. Franklin Templeton has already been experimenting with tokenized funds on Stellar. At Meridian 2025, don't be surprised if they announce a full-fledged investment product, something like tokenized money market funds or bonds. That would put Stellar in the same lane as Ethereum when it comes to RWAs, real-world assets, but with the advantage of lower fees and faster settlement. Deeper partnerships with Chainlink, PYTH, or Flare. Since Stellar is already hosting U.S. economic data, the next step is integrating with Oracle providers to feed that data into DeFi systems. Chainlink, PYTH, and Flare are the obvious candidates. An announcement of Stellar plus Chainlink at Meridian? That's the kind of headline that lights up Twitter overnight. Why investors should pay attention. Historically, XLM has seen price spikes around Meridian events. In the weeks leading up to announcements, speculation builds. Then, if a big partnership or upgrade is unveiled, that speculation often turns into momentum. Combine that with the technical tailwinds from the Whisk upgrade and the regulatory clarity coming from the Clarity Act, we'll get into that next section. And you've got a recipe for serious institutional interest. Investors aren't just betting on number go up anymore. They're looking at networks with real-world adoption, enterprise partnerships, and government legitimacy. Stellar checks all those boxes. Alright, so let's pivot into something that doesn't get nearly enough attention. The U.S. government quietly publishing economic data on Stellar. Yeah, you heard that right. GDP numbers, inflation stats, core economic indicators, all on-chain. Now, let's unpack why that matters, what it signals, and how it could reshape the narrative for Stellar and blockchain adoption in general. The big move, U.S. Department of Commerce plus Stellar. Not long ago, the U.S. Department of Commerce made headlines when it began publishing official economic data directly onto Stellar. We're talking GDP figures, CPI, trade balances, stuff that usually lives in dense PDF reports buried on government websites. Instead, this data is being streamed on-chain, immutably timestamped, and instantly verifiable. That's a paradigm shift. Why Stellar? Out of all the blockchains they could have chosen, Ethereum, Solana, Avalanche, even Bitcoin with ordinals, the Department of Commerce went with Stellar. That alone speaks volumes about Stellar's positioning. Why government data on blockchain is a big deal. Let's break down the significance. Transparency. Once data is on-chain, it can't be tampered with. That means no revisions in the dark, no statistical manipulation without leaving a record. Transparency goes up tenfold. Real-time access instead of waiting for monthly or quarterly reports. Economists, investors, and even ordinary citizens can access live streams of data as it's published. Imagine trading macro events in real time. Global reach. By putting economic stats on Stellar, the U.S. government isn't just sharing with Americans. It's sharing with anyone, anywhere. A farmer in Nigeria, a banker in Singapore, or a student in Brazil can tap the same dataset at the same time. Integration with DeFi. Here's where it gets really exciting. Once this data lives on Stellar, it can be fed directly into DeFi systems via oracles like Chainlink, PYTH, or Flare. That opens the door for on-chain prediction markets, algorithmic trading strategies, and real-time hedging instruments. The investor angle. For investors, this is a double-edged sword in a good way. On one hand, you've got the traditional narrative of blockchain for payments and stablecoins. On the other, you now have blockchain as the official data rail for governments. That second narrative is sticky. It brings in not just crypto natives but hedge funds, banks, economists, and policymakers. It cements Stellar's place as more than just another altcoin. It becomes infrastructure. And infrastructure tokens? They tend to accrue value over time. So, after walking through everything from the Whisk upgrade with unified events and parallel transactions, to the industry comparisons, to the upcoming Meridian 2025, and finally the US government streaming economic data on Stellar, the bigger picture is crystal clear. Stellar isn't just another blockchain jockeying for hype. It's becoming a core piece of financial infrastructure. Let's break it down. Technically, it's faster, cleaner, and simpler than a lot of its rivals. No parachain overhead, no confusing layer 2 fragmentation, just core upgrades that make the network more powerful. Institutionally, it's attracting serious players. We're talking Franklin Templeton, MoneyGram, MasterCard, and maybe even Paxos. These are companies that don't make moves lightly. Governmentally, the U.S. Department of Commerce choosing Stellar is a stamp of legitimacy that's hard to overstate. Once you're carrying official GDP and inflation data, you're not just crypto anymore, you're infrastructure. Market-wise, history tells us Stellar rallies around major events like Meridian. And with Meridian 2025 set to deliver some of the biggest announcements yet, the setup couldn't be more compelling. Now, here's the truth. Investing in crypto always comes with risk. Volatility isn't going away tomorrow, and even the strongest projects face headwinds. But when you zoom out, you see networks like Stellar standing tall while others stumble. You see adoption not just in retail speculation, but in enterprises and governments. That's the difference between a fad and a foundation. If you've been sitting on the sidelines wondering whether Stellar XLM still has a place in your portfolio, this is the moment to pay attention. Educate yourself. Don't just skim headlines. Dig into the Whisk upgrade, read about Stellar's real-world partnerships, and follow what's being announced at Meridian 2025. Track the signals. Institutional players like Franklin Templeton and MoneyGram don't experiment with technology unless they see real value. Government adoption, especially from the US, isn't a fluke. It's a roadmap for the future. Consider your exposure. No one's saying put all your eggs in one basket. But a measured allocation to infrastructure projects like Stellar could balance out the speculative plays in your portfolio. Stay patient. Crypto moves in cycles. The biggest rewards come to those who position themselves early and hold through the noise. Remember, the next phase of crypto adoption isn't about memes or hype. It's about utility, legitimacy, and integration into the real economy. Stellar is already checking those boxes. So the question isn't just, will XLM go up? The real question is, do you want to be positioned in one of the networks that institutions, enterprises, and governments are quietly betting on? Because if history is any guide, by the time the mainstream catches on, the biggest moves have already been made. Here's your takeaway. Pay attention. Do your homework. And don't sleep on Stellar. The groundwork being laid today could define not just the next market cycle, but the next generation of financial infrastructure.